Hello, everyone. We are live. Can you all hear me?
Yes.
All right, great. Little technical difficulties as usual. Time you get ready to come on, then there's issues. All right, so we are on. We are live, and this is LaTonya Martin with Grand Style Homes, and this is Buying and Selling Nashville. And today we're talking with local lenders about their best loan mortgage programs that they offer to help you and your clients. I'm going to start, of course, with who's the first person on my screen. We have Nicole Matthews with the Housing Fund. I have a couple of people that are not. Mr. Roundtree, your camera is not on. Are you still here? We have Antonio Roundtree with First Community Mortgage. We have Mitra Sharif with First Bank. We have Jay Williams with Dexus Mortgage. We have Rodney Terry with C Trust Mortgage. And we have Shedrick Doss with Southwest Funding. So I'm going to give each of them a chance. We'll go around for each of them to share their best program for you because our goal is to help each and every one of you be homeowners and successful homeowners and stay in those homes. So whether it's a first mortgage, second mortgage, investment loan, or refinance, I want them to share their number one program for you that's available. So I'm going to start with Nicole, because of course you're first on my screen, so I just go around as you are on my screen. Nicole Matthews, go ahead and share your program that you all have there at the Housing Fund. Nicole, you're on mute.
Okay, I was just really talking, but thank you. Thank you, LaTonya, for hosting this event. Again, I think this is an awesome event to get people educated on where to go as far as what they would need in terms of how lending. Again, like you said, I am with the Housing Fund, and we are a private nonprofit CDFI, which stands for Community Development Financial Institute. And we was created in 1996 because of the affordable housing crisis, which is still going on at this moment. And with that said, I want to definitely focus in on my product, which is the shared equity. And what the shared equity does is it helps families to become successful homeowners and build wealth. The program is designed to continuously keep that lasting asset to the community, but also for the buyer to remain in the house to remain affordable from buyer to buyer. So our program is just really basically there to help families with modest incomes not only to attain home ownership but to retain home ownership and to keep the home within the program affordable, like I said, from buyer to buyer, from generation to generation. So we have an awesome program, and after each one goes around, if time permits, I'll elaborate a little bit more on how you can become qualified for the shared equity product.
I think you're on mute, LaTonya.
It's one of those days. Okay, I'm going to go next to Antonio Roundtree.
Good morning, LaTonya, and all the other distinguished guests here. I'm, of course, the Vice President of Community Engagement with First Community Mortgage. First Community Mortgage is proud to present. We now have a 100% product for first-time home buyers. Credit score starting at 620. No MI. DTI is around 43%. It is a true 100% product. Down payment and closing costs are included. Yes, ring the alarms.
Exciting. All right, next we're going to go to Mitra with First Community Bank. No, First Bank. I'm sorry, First Bank.
Good morning, everyone. So I would say that one of our best offerings for first home buyers is our FB 100 affordable loan program. And it's available in eligible geo-targeted areas. The minimum credit score is 630 and it's 100% financing. And one of the very unique aspects of this program is it's a conventional loan. So right now, in our market, we're seeing, FHA options get overlooked quite often. So being able to go in with this low barrier to entry at a 630 score while also being able to put a conventional loan product on that contract really helps buyers, differentiate themselves and make their offer look the best, putting their best foot forward. There's also no income limit. So, that's another really amazing feature of the product as well. And there's no mortgage insurance. So 0 down with no mortgage insurance. Typically, you have to put 20% down to avoid mortgage insurance, but not in this case.
Okay. And I actually have some questions that I'll go back around, I guess, and ask everybody too. I have some questions. All right. Jay, you share what Nexa has. Are you on mute? I think you're on mute, Jay.
It is a Monday, so let's start again. At Nexa, we're actually a broker, so we can access many of the programs that exist here as well as others. One of the programs I'd like to talk to you about today is our lock and shop. And lock and shop means that as a borrower, you can actually lock your rate in, today's market rate in, for 30, 60, 90, 150, and 180 days so that you maintain the lock while you're shopping for a home.
Okay, that's excellent. I got questions about that too. All right, Rodney Terry, you're up.
Excuse me. Good morning. And LaTonya, I want to thank you for inviting me to this call here with all these great professional loan officers here. But my program right now that I'm seeing a lot of business is my 100% doctors program. Now, unlike banks where they just cover doctors, we also cover pharmacists, chiropractors. And so we've been having a lot of business with pharmacists and chiropractors, 100% program up to 950,000. And then anything over that is 95%, 5% down.
Okay. All right, Mr. Doss.
Good morning, everybody. Thank you, LaTonya, for this opportunity to be on this panel. One of the programs we have, it's like an entrepreneur loan. So it's for borrowers that's self-employed. We can use their bank statements for their income or a profit and loss statement. So I know we have a ton of entrepreneurs out there now that may not have claim enough income on their taxes to qualify for a mortgage that they need, but we can qualify based off a profit and loss statement and or your bank statements for a permanent residence, investment property, things of that nature.
Thanks again, because there are a lot of people sometimes that, as entrepreneurs and professionals, that have not filed their taxes. All right, so let me just ask you a few questions. I took a few notes. So first off, Nicole, on your shared equity program, did you mention the credit score or income limits on that?
No, I was going to wait till we come back around. So thank you for asking that question, because with the shared equity program, here again, the borrower has to go through the first credit mortgage originator to get qualified. However, they can also have to get qualified through our program. And our program, the credit score is 600, and the debt to income ratio is 45. And with that being said, it allows borrowers to be able to qualify for a more house or have a lower mortgage payment. And how that goes is it's 74% loan to value. The borrower has to put in 1%, and the housing fund will put in 25 because we're an investing partner. So in that great case, like I said, it's either going to help the borrower with a lower mortgage payment or on the flip side, it may help in this market, help them qualify for more house. And it doesn't carry any mortgage insurance due to the fact that it's a 74% loan to value. So that's the great caveat for the program itself. Did you have a question, Ms.
Okay.
LaTonya?
And that's like a second mortgage or second. It's a second mortgage with no payment, right?
It's a second mortgage.
Or no?
Yes, it is a second mortgage. It's 0 interest rate, deferred, and it's due on sale. So there is no payment during the whole course of the home, of owning that mortgage. The only time that it comes due, like I said, is on sale. Mm-hmm.
Okay, so basically you can get into a home with a 74% first mortgage, that 25% that the housing fund is helping you with, that shared part that they're helping you with, is not due or payable except upon refinance or sale. If they stay in that home for 30 years, then it's wiped clean, or they don't have to repay it per se. And it allows a borrower to get in for 1% of the loan amount. Is that correct? Did I sum it up a little bit?
You summed it up perfectly, and that is correct. And with that being said, so that's what the whole program is there for, because one is trying to create that affordability and helping low to moderate income borrowers be able to retain their home while they're paying the mortgage, and also building some equity as well to create generational wealth. Here again, it may not be the first home. I mean, it may not be their only home, but it's a stepping stone home. And it may not be for everybody, but here again, that's an option. And we have our business partner banks that do the first mortgage for us. So you have to go through those particular lenders in order to qualify for the shared equity program.
Okay. And then I have one more question that I lost. I'll come back to it if I think about it, Nicole.
Okay.
Antonio, on your 100% financing that you have, you know how you have a 100% finance loan option, and then is there an amount, like are they still responsible for the closing and down payment? How does your 100% loan option work as far as the amount that they have to bring to the table? You're on mute, Antonio.
Sorry. Yeah, they have to bring absolutely nothing. We will finance the entire amount. The closing costs will be actually a second. That, of course, is no payment, and of course that part will be covered by our bank. So the clients will simply come in, apply. Of course, we will handle everything, and then whatever the closing costs are is just a second, with of course no payment held on the bank side.
So with that one too, if they refinance or sell, do they have to pay you back that second?
According to the information that we have been given, as of now, no.
Okay, thank you for that. Let's see, Mitra, let me see what I have for yours. You have the no income limit, no down payment. No, now, did I hear you say that it's only limited to certain zip codes on your conventional loan program? You're 100%, Mitra?
Yes. So it is geo-targeting. So basically we have to go to this website to ensure that the property is found in an eligible area. So not even more so zip code specific. I know we are familiar with the THDA, the hardest hit fund, and it being in certain zip codes, but this one is more so, area specific, where they're looking at, the census tract and determining if the property is eligible or not.
Okay. And so once a client finds a home, then they call you to determine that, or will they be able to determine if that home is in a certain area before they go out looking?
It would probably be best to call. I mean, we can share the link with them to utilize it, but sometimes they may have a little bit of trouble. So just calling the expert to look it up just to ensure that it's in the right area, I think would be the best, decision.
Okay.
And we also
and that's a 100% program as well, right?
Correct, the 100% conventional loan.
Okay. Now with that one, do they have down payment, closing costs, or anything to pay?
They do have to pay their closing costs. We also partner with the Housing Fund. That's one of our investors for down payment assistance. And soon we will be a partner in the shared equity program that was being explained here all across Tennessee.
Okay, thank you. All right, Jay. So with your 30, 60, 90, 150, 180-day lock program, that seems like something that would be great, especially if you're getting new construction. Can it be for new construction as well? And my next question is, based on how long you lock it for, is there an additional amount that they will have to wind up paying? I'm assuming so, because of course, the longer the lock, probably the more the interest rate. How does that work?
So that is correct. It is available for all QN products, which means your traditional financing, new construction, existing, modular, and some in manufactured housing. So if the rate, for instance, were to expire, right, it's going to cost you 0.25% to lock the rate up to 90 days. Anything beyond that, it's all the same rate. And what happens is when the rate expires, it's going to cost you to renegotiate the rate or to float down the rate. But it doesn't cost very much. It's less than 1%. In most cases, it's 0.5% or 50 basis points, as we call it. So yes, there is an additional fee, but to know that you can lock today's rate in and not have to worry about what the rate may be in 6 months is the benefit to that program.
I agree, because even with new construction, it seems like nothing is really closing on time, even though they
Right.
wanted to close on time. We all wanted to close on time, but a lot of times it may not be the case. So
Correct.
that's a great option, especially with these rates that seem to continually to increase. Let's
Correct.
see, we'll go to Rodney. I'm sorry. Okay. um, and I don't think I really had any questions on your 100% doctor program. I guess my only question is, what did you talk about the credit score? And then my second question was, is it a true 100%, or I'm sure it's closing costs or some type of payment they have to pay with that as well? I just want to confirm.
Yes. As far as the credit score, my doctor program is a 680 and up. And as far as it's 100%, but the borrower will be required to pay their own closing costs unless the seller can pay that for them.
In this market, Rodney, I doubt it. It's hard right now for sellers. Sellers are not really paying anything right now.
I know, but
Mr.
let's throw it out there.
What'd you say? What'd you say, Rodney?
I understand that, but it's still an option.
Good deal. Great program. My Mr. Doss, I like the entrepreneur program because it seems like for those that I do run into that are self-employed, sometimes they may not have their tax documents sometimes together. So if for those that are unemployed, it's a bank statement program, so you're not having to worry about their tax returns, I'm assuming. I just want to confirm, what are you needing for that program? Is it just the bank statements? What do they need
That is
to be able to
correct.
qualify for that?
Yeah, that is correct. We do not need tax returns or anything like that. We can use you can do one or two options. You can use the bank statements for the last 12 months, and then they will average up the deposits in that account. And that will be over the last 12 months, and that will become your effective income. Or another option is you can use a profit and loss from your accountant or a tax preparer as well for the last 12 months, and they can show what your income was for the last 12 months as well. But you do not need tax returns at all.
Okay. Is there anything that anyone else wanted to share about their program that I may have missed or that you did not get to say that you want to let borrowers know of? Again, anything else that may have set you apart or anything that your program offers that you want them to know?
Well, I would like to add some things, LaTonya. This is Nicole again
Okay.
from the Housing Fund.
Yes.
Basically, and I want people to know that the shared equity program is statewide, so it's not targeted to a center track area or zip code. And I think my lending partner from First Bank mentioned that. So thank you for mentioning that. But I just wanted to definitely reiterate that. And also with all the loan officers on the phone, here again, the housing fund, we are here for financing. So even though the shared equity product is my baby, we have other products like the down payment assistance, which is statewide. We have home improvement loans. We have the community land trust. We have the housing resilience funds and home buyers education and development loans. So we have a lot of programs that we are just trying to make people aware of, because I understand a lot of people just know us by the down payment assistance program. But we have a wealth of tools that the loan officers, borrowers, and realtors can just please call in, and we will get you those answers and get you to the point of contact. Because here again, we want to just help all that wants to be serviced. So with that being said, the shared equity is an awesome program for these low to moderate income borrowers to have options. Here again, it may not suit everyone, but it's just about giving options. And it sounds like there's a lot of different options on this call. So I'm glad to be a part of it. But yes, just think about the shared equity. And if anybody wants any more information, please reach out to me at the Housing Fund, Nicole Matthews.
Anyone else have anything they want to add?
With our program that goes in, to all the 46 states that we are licensed in.
And a lot of you, I believe, too, are in more than one state. So, and Antonio just said 46 states. So that may be something too that you want to share. So not everyone is just local to Tennessee, even though they work Tennessee. So these loan options that they're talking about may be available in your state. The Housing Fund is a Tennessee program, but some of the other lenders may have additional states they work as well. Anyone else have anything else you all want to share?
I'm licensed in 47 states and can do refis and purchases. Those excluded states are Maryland, Alaska, and Hawaii.
Okay.
I'm also licensed in multiple states except for Alabama and Arkansas right now. But that will be straightened out real soon. And when we get that done, I'll be licensed in all 50 states.
Wow. Okay. Sounds good.
I would like to say that
Anyone else?
I'm very thankful to be on this call and getting together with mortgage professionals, because everybody here shared something different that they can do, because it's bigger than us. It's about the client. So showing that we can actually work together as a whole is very beneficial to the clients, because I always say that it's nothing you can do to stop you from buying a house. Either you need down payment assistance, you're a doctor, you haven't started yet, you're an entrepreneur. So it is a great opportunity. I love to see the togetherness from loan officers. I would love to share contact information with all you guys. If I can't do it, maybe you can. And at the end of the day, we all win, because someone got into that home, and the realtor and the borrower will appreciate us more by referring us out versus just declining the loan. So it really makes me happy that LaTonya got this stuff together, and we were all willing to get on here. I don't think anybody was upset that I just want to be the only loan officer on there. It really makes me happy. So that's all I really got to say. Again, entrepreneur program, we can do that, but the wealth of knowledge and the products that's on this call here, I think we can do pretty much anything.
Yeah, I agree. And I appreciate each of you too, because I mean, we need each other, right? We have the buyers, as real estate agents, we have these buyers, we want them to get into homes. So whoever has the best option for the client, we want that person to help them and work with them through the process. So I appreciate everyone sharing what you all have, because every client has a different need. Before we get off, anything else anyone else want to share?
I just wanted to say, as a broker, we do have options that go down to 500 credit scores for those that are or actually financially fit, but just don't have the credit score that a lot of the programs that currently exist that would be able to help them. There are certain caveats to that. We do have down payment assistance as well that goes to buyers that are at 580 and above, and conventional products that go down that start at 520, or I'm sorry, 620. So anything that my colleagues here aren't able to service, I would be happy to look at it and to help that buyer out. So, and we are located in 48 states.
Is your down payment program directly through you all, or do you use that in conjunction with another program?
We use it in conjunction to other programs as well as lender programs. So it's not us directly, because remember, we're a broker, so we shop loans out to other lenders, wholesale lenders.
All right. Well, again, I appreciate you all. And a lot of us are not, we're on live, so we're not really into the chat. But if you all want to reach out to anyone on the call, go ahead and give your best website, contact information so that they can reach you all directly as well. Nicole, you're first on my screen.
Okay. Well,
What
if
is your
anybody wanted to
website?
reach out, can you hear me?
Yes,
If
I'm
anybody
sorry.
wants to
I'm
reach
sorry.
out, you can reach our website is www.thehousingfund.org. And if you want to reach out to me directly, my email is N Matthews, and that's with one T. Please check it; it will auto correct at thehousingfund.org. Again, that's N Matthews with one T at thehousingfund.org. Or you may call me at 615-551-2752.
Thank you. Antonio?
Yes, you can reach me as at Antonio.Roundtree at FCMpartners with a S.com. And you can call me directly at 615-956-5434.
Thank you. Mitra?
Yes, you can contact me at my website, which is www.moneymitramortgage.com, which is money. We all know how to spell that. Mitra, Mitra, and mortgage, mortgag.com. You can also feel free to email me, which is connected in my website as well. But the email address is MITRA period SHARIFI at firstbankonline.com.
Thank you. Jay?
Do it again.
Sorry, I was on mute. So it's easiest to reach me through my website, which is qualify, the number two, close.com. And all of my contact information is located there.
Thank you. And Rodney?
You can reach me at my email address at rterry, that's Terry, at C Trust Mortgage. C is SEA trustmortgage.com. You also can reach me directly at 615-828-2309.
Thank you. And Mr. Dawes?
Yes, you can email me at sdoss, that's SDOSS, at southwestfunding.com. You can call me directly. My cell is 205-239-3479. And finally, the website is www.southwestfunding.com/SDOS.
Thank you. And I'm LaTonya Mark with Grand Style Home, and it is what Grand with an E. So grandstylehomes.com, or you can call me at my office number is 615-468-1050. And I look forward to helping you find a home. So of course, call any of these lenders or give myself a call, and we love to help you become a homeowner. Or they can help you refinance your home. So again, thank you all for joining me today. And I look forward to working with each and every one of you, if I have not. Talk to you soon.
Thank you.
Thank you.
Thank
Bye.
you.
Thank you. Bye-bye.